Onto your markets news now. Asian markets were on a downer following the cue of US markets from last night as concerns around trade tariffs continue to weigh on sentiment. The Nikkei share average lost 1.8%. The Hang Seng index declined by 0.65%, while the Shanghai Composite Index closed down 0.67%. US stocks ended yesterday's session on a lower note as investors reacted to the Trump administration's new tariffs on car imports, further raising the serious potential of a trade war with its attendant impacts on the global economy. The Dow Jones Industrial Average declined by 0.4%. The S&P 500 fell by 0.33%, while the Nasdaq Composite Index finished down just over 0.5%. All right, taking a look at our local indicators, we see that the all-share index is still down 0.3% at 89,618 index points. On the currency front, the rand is trading at 18.15 against the US dollar, 19.53 vis-a-vis the euro, and 23.49 against the British pound. On the commodity front, we see that gold is trading at $3,071 an ounce. Platinum at $984 an ounce, while Brent crude oil is trading at $73.18 a barrel. Let's get into discussion now with Warwick Lucas. He is the head of private clients at Vunani Securities. Thank you so much for joining us, Warwick. So this is quite a difficult moment for investors. I mean, with this tariff story, how does one navigate this very difficult terrain?
Well, good afternoon to the viewers. I mean, it's clearly a big problem. I mean, in terms of tariffs, the one thing that is an economic truism is that if one takes tariffs and asks net, if two countries or a multiple apply tariffs to each other, who is the winner? And the answer is absolutely nobody. Unfortunately, with trade discussions, they're invariably complicated and full of political turns and twists. But the problem with them is that once you start implementing them, it's very hard to roll them back, because there's kind of a reallocation as to how you set up your manufacturing and your supply chains and so on. Of course, implementing them as they are now is also very complicated. I mean, auto assembly businesses are extremely complicated, and the initial implementation will certainly be very, very disruptive.
Yeah.
Particularly to American producers.
I was going to say, Warwick, on the point that you're making, I mean, I was listening to a discussion around this very issue yesterday, and a Canadian analyst was saying that because the Canadians are the ones who are going to be most affected, because about 80% of, they send about 80% of their car imports to the United States. And they were indicating that a lot of the parts that they get come from the United States. Now, if they can't build cars and send them to their key market, then it means that it's going to affect the American worker who contributes to those assembly parts that are then put in a car in Canada and sent back to them. So, like you say, it does sound like net, no one's really a winner.
Well, very much so. I mean, of course, then what's going to have to happen is they're going to have to pass through the details and say what's going to potentially work, what won't. Do we do export and import credits and so on and so forth? And a whole new bureaucracies will spring up, or maybe they just take a zero-based budgeting approach and hack and slash everything, which is also extremely untidy and could actually result in quite unpleasant economic consequences.
Yeah.
So the theory is nice. The implementation, yeah, there's a devil there.
Yeah. So in negative situations, there's always a winner or a silver lining somewhere. Gold looks currently unstoppable in these uncertain times. Do you think that we could see it kind of breach through 3,100? Because it has now, of course, breached through the 3,000 mark.
Well, I've always said to anyone that would listen that gold is something you never really want to make money from, because when you do, it's quite clear that everything else has gone to hell in a handbasket. And that potentially is the case if trade negotiations and so on get out of control. So yes, there is certainly potential upside from that point of view. Whether or not there is inflation from tariffs is another story. The discussion there is actually quite more complicated than it first appears. But there is also the issue of, well, is gold an alternative currency? It's not big enough to be a true alternative currency, but there may very well be players that want to have alternative currencies almost at any price. So potential upside for gold, certainly it's possible.
Yeah. One last thing before I let you go, Warwick. I've seen stories about particularly US investors selling off South African bonds. How true is that?
Okay, so the truth is a little bit more messy. In terms of what are foreign buyers as a whole doing in South Africa, well, yesterday they sold $4.2 billion, but on the week they net bought 2.9, on the month 4.3, and the year 16.8. Foreigners are still here, but it's very important that this is a world in which available capital is declining, and we as a country, in order to attract the share that we need to keep our economy ticking over, need to mind our P's and Q's so we don't chase these investors away, because they're getting rarer and rarer every day.
All right. Well, on the P's and Q's note, we'll leave it there. Thank you so much. That was Warwick Lucas. He's the head of private clients at Vunani Securities. We're going to take a quick break, and thereafter, Diabo Sito will have SME on point for you.